Good morning, everyone, and welcome to this live intraday strategy webinar. Today is Wednesday, January 4th. Good to be with you guys this morning. Eileen, Conwall, Mark, Pooja, Theos. Yeah, we got the whole crew here today. So we've got a lot to cover. I was just having a chat with Mr. Conwall here on a couple of pairs. He wants to look at Kiwi Yen. Obviously, we'll cover nat gas, copper, gold. I do want to take a look at dollar CAD to start things off with that breakdown overnight. Euro Oz, Euro Yen, Aussie Kiwi from last night. Obviously, we want to cover yesterday's setups on Aussie dollar, Euro Pound, and Dollar Yen. Euro Pound's kind of been a dud. It came right back, so I don't know what to do with that right now, but we'll take a look. Kamal says, once again, thank you, Michael, for your levels as I close my position around 334.86. Okay, cool. Yeah, it might have been a little aggressive on that 3.7. We'll take a look at it for that nat gas trade. All right. Any questions, trade setups you want to review, guys? Feel free, as always, to interrupt me. Just throw it on the message board, and we will take a look. Before we get started, here's a look at the relative performance of the greenback heading into the U.S. trade session. Interestingly enough, I actually was laughing out loud with this yesterday. Remember, we were looking at the dollar index plowing through 103.21 again yesterday in the webinar. We even noted 103.65, the high from last year. We even went through that in intraday trade. And as I was saying, guys, and as it sometimes pays off early in the month, early in the quarter, early in the week, to be a little bit more reserved and see how these stretches pan out in near-term price. Look where we closed. It's ridiculous. You can't make this stuff up. So we closed just below 103.21. It was right on 103.21 if you look at the close price there. And that in and of itself was a near-term bearish development, right? That you stretched right through this major resistance level that we haven't been able to close above for the entire month of December, even on all those stretches in the dollar index. You saw that pullback and the index close again. That near term, again, causes pause, right? You don't want to get excessively bullish and continue to favor that long side in the dollar, my humble opinion at this point. You can see that the dollar is weaker against all its major counterparts so far today. Biggest gainer, the CAD, up 0.83%. That's sort of perplexing some people on the back of the decline that we saw in crude prices, which did the same type of deal that the dollar did. Soared right through, resistance, failed, and came right back below. Broke the opening range for the week to the downside. So we'll take a look at that in a moment, but CAD is the biggest gainer here, up 0.83%. That downside in dollar CAD coming into some support. We'll go over that first. So if you're holding short exposure on dollar CAD, something to be cautious about here. Aussie second highest performer, up 0.62%, Kiwi up 0.4%, and so forth. I don't want to necessarily trade dollar Swiss, guys, but I do want to just note that I've been looking at the COT data, and there's a huge, massive shift to the long side in dollar Swiss, which is just something that kind of points out to me you want to be very cautious of. So if you're trading Swissy, it's up 0.15%, but I don't know, I'd be cautious on that trade. All right, and dollar yen with a slight gain here. Dollar yen hasn't really been making, or yen rather with a slight gain here. Dollar yen hasn't been making much progress yet to the downside, but I still like it. Remember yesterday we were talking about dollar yen, and we overlaid the Nikkei chart. Guys, Nikkei overnight just insanely rallied. It's right up against resistance again, and one of the two is lying, right? If the correlation is to hold, or if there's any, even if it's not a correlation is to hold, these divergences in price oftentimes can happen at major turns. So we'll talk about that as well. I got you, Conwall, on copper, no worries on that. All right, so let's jump right in. Here's what the dollar index looks like right now. Again, keep your eye on that 103.21 level as resistance. Near-term support, key support, monthly open, all stacks right down at 101.80 into 102. Okay, so there's really not much to talk about here. The momentum signature is very interesting as well. Remember, we were looking at this trigger, support trigger, which gave out, okay, late last month. And on the rally yesterday, it actually looked like it was right back above it again. And that's why I said, let's wait for the close and see how this pans out. Now, this could be just a break of support, back into resistance, former support, and then push lower. Again, further reason, another factor to look at to be a little bit more cautious on long dollar exposure at this point. The uptrend is still intact on a broader scale. It's just the immediate upside bias I don't think you want to get too aggressive on from here. If we make it today and we close above 103.21, done deal. Look for another run on 103.65. Again, like I said yesterday, there's really nothing on tap until like 105 basically. But this is still the major threshold for me on the index. Any questions on the ICE dollar index? All right, that's number one. Dollar CAD, here's what we look like. And here's what we looked like last night. So to start things off, just wanted to highlight again a near-term bearish bias sub 134.92. That's the 50% retracement of the recent range off the highs. It was also the median line that extends way back to the May lows here. So it was a nice level to sort of keep as your bearish invalidation. Needed a break of support to look for a run in that 133.39 level. We saw 133.39, kept on going, and now we're coming into a key support confluence here. We didn't quite make it into the 618 yet, 132.76, I believe. And that whole support range extends into 132.54, where you also have, I can just show you right here, where you also have the 100-day moving average and the highs, okay, from back here in July. So really nice pivot in price. It's the next downside target here for dollar CAD. If you're holding short exposure, keep your eye on that key range. I'd start to shave some off on any short exposure on a dip there. Don't necessarily want to get aggressive on playing a rebound, guys, but I will be on the lookout for some possible, just really short-term long scalps off that region if we do get a nice reaction. Here's what the scalp looked like. Okay, intraday chart was showing us stacked up against former trendline resistance, turn support. That also converged on a basic 38.2 of the advance. Short side bias in play about below 34.92. Again, the break saw 133.39, and we're looking at this region here right now. Okay, here's what the live chart looks like. So if we get that last dip, like I said, I'll be looking for a reaction here, 132.64, 132.78 region. At this point, you want to bring down your bearish invalidation level basically to the weekly opening range high. So as long as we stay below 34.52, 34.53, I think was the high, 59, you want to continue to look for those near-term rallies to sell. Again, coming in some near-term support here. Beyond this region, I do want to just highlight this near-term slope. That could offer something. That's down at 32.14. I don't have any targets beyond this region noted last night, so just watch that 32.12, 32.15 region. And then key would be the lower parallel down here. That basically takes you into 131.80. Just kind of stretch things out for you. So this would be sort of a major support level, which I wouldn't even want to mess with this on a long side, on a short side approach until we break that. This could be a major or a longer term or medium term double top formation coming into play here. Obviously, we don't get that confirmation until we break. But that being said, that's sort of the floor I'd want to respect here on dollar CAD for now. Okay, and we're going to bring down that short or that bearish invalidation level to 34.53 from 34.91. Questions on dollar CAD? Here's what the hourly looks like. Still in deep oversold territory here, so I wouldn't put it past this thing to still make that run on key support. Keep in mind for dollar CAD, you still have major event risk on Friday. You have U.S. non-farm payrolls and the Canadian employment report coming out simultaneously. And as I always tell you guys, these Fridays can be really volatile for dollar CAD, right? Especially on a miss on one and a beat on the other. The simultaneous release can really exacerbate some major moves in near-term price action. So keep that in mind for Friday. And we don't need that anymore. So this will be the revised setup here. If you do need to take a snapshot, feel free to do so at any point. Again, here's the 4-hour. Dollar CAD. Still one of my favorite setups at this point. And that's number 2. I guess we can take a quick segue into oil. Just because we're on the loonie, so that'll be number 3 here. Here's what crude setup, the crude levels look like. So for the daily chart first, remember we were talking about this yesterday, and as we were in the webinar, again, this thing looked like it was plowing through 54.21. Same type of setup. You know, you need to respect the close. It's all about the daily closes as far as being able to validate a break of major trendline support or resistance. I wouldn't say this is a major trendline support or resistance, but they both converge. Again, if we take a look back to median line formation, we've been following off these lows. Let me make that a little thicker here. Okay. The upper parallel comes right there. You have a 786 retracement from the decline off the highs that you made back in 2015, specifically May. And you have that near-term slope all converging right there with some nice highs in price. I mean, it's just a nice spot. So on a near-term price action break in intraday, you still want to look to see a close above that level. Well, we failed miserably yesterday. Not only did we pull back below that key support, but we closed markedly lower, basically almost a week and a half low here. And that, again, is an outside day reversal off resistance, a bearish formation any way you slice it. You had some nice divergence in near-term momentum as well. So for the last couple of highs that we've made in price, you saw that the oscillator was unable to make fresh highs. That is divergence. Also, this happening below the 70 threshold, giving us further conviction. Really nice setup there. And I'm looking lower in crude. Okay, near-term support, at least you'd start to look for, would be somewhere in the range of 51.64 into 51.40. Okay, you're basically looking at the high close for October trade, the actual spike high, the concerted high that you made here in June, and this was also the 1618 extension of the advance. I don't really want to stress that 1618, so I'm actually going to get rid of that. This is finito. You don't need to stress that anymore. And this was not the 2016 high day close anymore, but the October high close. And just to get a picture real quick, guys, bear with me. I want to see what this retracement looks like. Ooh, and the 50% comes in right on that level. Okay, let's just distinguish these two retracements. Add some color here. And there you go. So initial support, sort of an initial region, just because of the, how many times we've come up against this region and gotten rejected, you want to respect that 5140, 5164 region. Now, this is an interesting dynamic. And yes, Eileen, actually, you read my mind as I'm looking at the screen. She says, divergence moves with oil and CAD seems odd. Very similar to what we're seeing with the Nikkei and the dollar yen. These divergences, the more we see them in so-called quote-unquote correlated assets, the more you want to take a step back and really start to assess the probability or possibility that we could be making some major turns in some of these trades. So yeah, I'm very closely paying attention to that, Eileen. Don't underestimate how long these divergences can continue. Eventually, one of them will play catch-up. Once we get which one's lying, we're going to have a much better play. But in the near term, definitely an observation you want to pay attention to, 100%. So use those for turn observations. Yes, they basically highlight the risk, Eileen, that price is reaching some sort of extreme. One of them is lying. And I think the dollar yen is going to be the perfect example. We'll go over that in just a moment, but very nice observation. So listen, for crude, it's at risk for further losses, sub 54.29, bottom line. Bottom line. We talked about 54.21/29 yesterday in the webinar, all webinar long. We closed well below that. You could see a pop higher in intraday price. You'd look to sell that for a move eventually into 51.60, 51.40, and down into 50.21 would be a basic 38.2. Now, what I want to say as far as near-term price, remember this pitchfork, guys? It's the same pitchfork that we added before the close of the year last year. Look what's going on here. Okay, It's messy. I don't want to say that it's an ideal scenario, but certainly further highlights the risk that we're coming off of a little bit more of a stern break here. So this is not an updated chart per se as the one that's on the daily chart, guys. So keep your eye on these levels. I'll update the intraday chart for you for tomorrow, but these are sort of the major key levels here for crude near term you want to pay attention to. And again, this can continue lower, and so can dollar CAD. There's nothing that says that that needs to stop in the near term. But one thing you want to note, okay, is that while we're looking for further downside in crude, dollar CAD is actually coming into that near-term support. So if we get a drop there, you could see some upside in dollar CAD. Its CAD weaknesses further exacerbate what we're seeing in crude, yada yada. So I hope you follow me on that. Any questions on dollar CAD or crude? I'm sure Jamie will have some interesting observations as well. Don't forget the midweek strategy webinar today at 12 o'clock Eastern. Jamie will be on board with some of his analysis on current situation as well. All right, so that is dollar CAD and crude. Euro Aussie, number 4. All right, got to start picking up the pace here a little bit. Euro Aus. Okay, first on the daily chart. So we talked about this, I think, briefly yesterday in the webinar. The fact that we broke that major trendline support dating back to December of 2015. You had some really nice rebounds and recoils off that level. We broke it, resistance, again resistance on a convergence with a basic trend line off the highs. Again, these emotional spike highs, sometimes I'll omit, but you have 3 touches, and that confirms it. So that converged right there. You had the median line for the current upper parallel. See that 50 line right there, catching this almost to the pip. And you had momentum divergence as price action made a higher high. The oscillator held those highs. Divergence happened sub 70, almost sub 60, okay? And you got that turn in price taking us back below the 100, shifting the focus lower. We talked about Euro Aus last night. It had already made a pretty aggressive move. Again, so the target on the daily, keeping in mind, we're basically there right now. Like I said, we didn't quite tag it, but we're basically there. Here's what it looked like last night. So you want to keep a downside bias below 45.85. You're looking for a move basically into 143.03 into 143.20. We're just grazing the top of that range right now. Here's what the intraday chart looks like on Euro Aus. You can see the low that we registered was actually 143.24. So about 4 pips off here. Again, wouldn't be surprised to come to the U.S. session, make another run on that low, but this is a sort of key support that you don't want to really mess with as far as holding shorts through that. I would be looking for a possible rebound there. If it does break, again, your next downside target isn't until down here at 42.12. So you're looking at like a nice healthy 79, 80 pips on a downside move beyond that. You're probably not going to catch right off the bat. But it does look like you could see that break over the next few days. Again, near term, I'll be looking for some possible support here into the U.S. trade session for Euro Aus. A level you want to respect near term, I think. Again, the daily chart's really what has me a little bit more reserved. This is the 2016 low day close. It's also the key 618 retracement of the advance. Lots here. It's also last month's open. Not that that really matters at this point, but just adds further conviction. Seen some swing lows down here, some swing highs, swing lows. Look a little lower in Euro Aus, and I'd be looking for a near-term reaction off of this mark. If it just plows through and it breaks, like I said, it's probably going to drop pretty quick. This trade tends to make some pretty stern moves when it decides which direction it wants to go. So don't be looking to necessarily fight this, but I will be looking for signs of exhaustion heading into the session here. Also, when you get a chance, can you explain a bit more about how to see if volume and volatility have increased or not? So a very easy way to look at volume, Eileen, is obviously the ATR or the rate of change. Both of those are really good ways of kind of assessing near term what price action has been doing. for volatility. Volume is not something I really take into account unless we're heading into times where you'd worry about something like that, okay, like a holiday, God forbid there's some sort of natural disaster or some sort of shock to the markets. That's when I'd start to worry about volume. But coming back from the holiday here with the market starting to really roar, where do you see rate of change, says Eileen? Oh, you can just bring it right up. It's an indicator. Just type in ROC. Okay. The difference between rate of change and the ATR, that's not the only difference, but one of the major differences is that the rate of change is going to tell you, also give you a gauge on directional trade. So the rate of change was either negative or positive. This can be an easy way of assessing. This is a horrible chart because of that spike there. So let me show you this on the daily chart where it actually matters. There we go. So the rate of change is a cool thing to look at because it can easily assess, wow, this was the biggest single day gain. Oh, by the way, let me take this back, Eileen. I have this set to 1, and every time I look at rate of change, guys, I want to look at it in the context of how big was this advance that we saw today? You know, when was the last time I saw a single day advance of this magnitude? And believe it or not, over the last couple of, obviously over the last couple of months, there's been a lot of instances where you've seen these blowout ranges, and it's helped to go back and see, okay, last time I saw a range of this big, what did the markets do subsequent? So this is a very simple way to be able to gauge 1 day rate of change, okay? So that loss that we saw yesterday was the largest single day decline since back here in December. And on the context of that decline, you saw price action continue to move lower for the next couple of days before making a rebound higher, keeping the focus lower near term. Does that make sense, guys? Kind of how you want to use this? Same thing here. When you see massive spikes in price, okay, here's a rebound off of support. Last time we saw a spike of this magnitude, you go back in price, was here. You had another day of a push higher before it spilled over. You saw another day here. Again, one more day of push higher before it spilled lower. So using this to sort of assess what previous price action has done can be a very helpful way. Most people do not use rate of change on a single day. They either use a 14 period or something like that, Eileen. This is what you'll typically see in a textbook when you're looking at rate of change, and this kind of smooths it out. It takes the average of the last 14 periods, so you can assess a little bit better if the market's on a stronger uptrend on the rate of change or downtrend. But for me, using it to be able to kind of quickly gauge when the last time we saw major stretches in price. Eileen says yes, better. All right, cool. Nice little quick session there on rate of change. Any questions on Euro Oz? Look for some near-term support. Again, like I said, I think we can get a little bit lower here, but sort of 143 is what you want to look for a reaction in Euro Oz. Possible rebound, but still want to stay bearish sub 45.80. Next up on tap from last night was, so that's Euro Oz, looking for support right there. Euro Yen. Here's what Euro Yen looks like. Not much to do here yet, but big level. Euro Yen will be number 5. 123.47. I highlighted this same exact setup, back on the 20th. If you click on the link there, it'll take you right to that setup. It was right here, and the daily chart looks exactly the same. This is the same daily chart from the 20th of December. 123.47 still remains that key 618. If you look at this on a close basis, okay, this median line, this 50 line right here, has been right on point. Look at that. You got to give it allowance here, but you get the picture. So the risk is still there. It's basically an uptrend at resistance. What do you do with an uptrend at resistance for near term, excuse me, guys like me? That gives us the opportunity to load up on some on some pullback plays against 123.47, I think you have a really good marker there in that if it breaks higher, you're basically looking for 24.66. You're looking for that spike into key resistance at 126.84. But near term, as long as you stay below this, you're in a very basic range below resistance, and you don't want to give it more merit than that. Yes, we've been getting divergence into the highs. Yes, I do like the fact that we came off this median line pretty nicely. You'd expect to see a little bit more of a pullback here in euro yen. Haven't gotten it in price yet. And if you're going to get long the yen, i.e. short euro yen, if you're going to get long the yen versus something, this is probably not your best play. I think you're better off getting short dollar yen than euro yen. But I did want to bring this up because of the level that we've continued to hold for over a month now. And any shorts you've taken against 23.47 have been fruitful. Okay, here's what the intraday chart looks like. Very, very basic range below resistance. Okay, there's not really much to do here just yet, but you do want to keep your eye on this level. This is the 60-minute chart. Here's what the 4-hour looked like last night. You want to keep your eye on this range to look for a downside break. Ultimately, like I said, if you do spill, you'd look for a move into 119. And that's an area I'd look for exhaustion, possible entries for the long side again on euro yen. Questions on euro yen? Eileen says, these conditions overall and larger moves may be better to look for swing trades as opposed to intraday then? Certainly, 100%. I don't necessarily think it's got to be one or the other, Eileen, right? I think from my standpoint, from my type of trading, I want to see the ranges play out. So even though you might be getting some really nice entries here, I think you are, on some larger swing trades, it's just my personality. It's the way I trade, right? So the conditions right now for swing trades, I think are gonna get better and better, definitely. As the ranges start to open up, you get those flows starting to come in for January trade, some new positioning. Obviously, there was a lot of portfolio adjustment at the end of last year. You saw the markets kind of spill. I still think it'll start to pick up. Conditions will continue to improve. Yeah, right now, mostly, Eileen. Here's what I'll say. I definitely have been trading. She's asking, so do you use these conditions to sit on the sidelines? I have been taking some positions, but literally, Eileen, quarter of my typical trade size. So I'm just testing the waters. And as we get more ranges and more directional structure, it's all about the structure of the near-term trend. You know, if you start to get a nice pitchfork in play, you got a nice median line you're playing off of. A lot of these trades are kind of in no man's land right now. So if you're going to take positioning, I don't want to definitely deter you because there's definitely lots of opportunities. A lot of the setups that we talked about last night are even in play, dollar CAD being the primary one right off the bat. But you want to take a smaller trade size for sure until the ranges start to open up. Questions on euro yen, going once, going twice. Okay, Aussie Kiwi number 6. Quick update on that. Coming in some near-term resistance here. So I actually highlighted this on Daily FX as well. Here's what the Aussie key looked like on the broader sense. Remember that slope that dates back to the 2014 January low. I've showed you guys that slope multiple times here in the webinar, but just a quick reference for those of you who might be new. Here's the January 2014 low. Basic slope. Parallel extending off the lows here from 2015. You got some nice, decent plays and pivots off that. Extending off the low from late 2015. Got some really nice pivots off that. Take that same slope off the low from last year. Nice turn. Nice turn. Now that happens to also be a 786 retracement of the 2015 trading range, of which all of 2016 was within. Okay. And on a basic close basis, just a basic 786 retracement of the advance also held the lows. So we were looking for the rebound. We got it. Initial targets have been taken out. It's a 100-day moving average into 104.96. Initial targets on the upside noted last night. 104.85 into 104.96. So that's basically where we went into resistance today and pulled right back. Here's the intraday chart looks like. on Aussie key near term. So again, I didn't highlight it on the intraday chart because it's the 200-day, it's the 100-day moving average, so I can't get that on a 4-hour chart. But nonetheless, that's the first level. So respect a little bit of a pullback here. This is the major region of which I start to look for a little bit more rigid resistance. It's 105.47. Okay, it's the 50% retracement, but you have a lot stacked up there. That same slope line that we talked about in the daily chart, that crosses just ahead of it. You have the upper median line parallel. I guess it's easier to see on the daily chart right here. There's kind of a lot stacked up in this region. So if you do break higher, again, it's later in time where they actually all converge, not till the 10th or so of January. But before we get up there, like I said, we could see a little bit more of a pullback play and then that stretch higher. So near term, I think the long side of Aussie key, you want to sort of, if you're not in something already, you kind of want to sit on the sidelines at this point, wait for the pullback to give you a little bit better of an entry. If we do get sort of a move lower in U.S. trade today, I'd be looking at a basic retracement here. Look at the 50 or the 618 to launch a nice counteroffensive back into 105.47. Questions on Aussie key? Yeah, Aline, there's nothing wrong with that. Nothing wrong with that. Sometimes it's just the way it's got to go. Aussie, Kiwi, Aussie dollars next, number 7. Here's what Aussie looks like. So keeping this in context actually is a pretty good idea here. Looking at Aussie dollar, if I can find it, here it goes. This is the reason why I think Aussie Kiwi near term can see some pullback as well. Okay, we're at the near term bearish invalidation level for Aussie dollar. That's 72.79 into 72.82. We talked about that region in Monday's update. Here's what Aussie dollar look like. Here's what the daily look like. And this is our near-term bearish invalidation level. It's the 2016 open. It's the 50 line of the current descending median line formation. And on this pop here, I'm actually looking for a little bit more of a rigid resistance. To be quite frank with you guys, I think it's going to break higher. This is where it needs to hold if we're going to in fact move lower from here. If this breaks higher beyond 72.82, I think you look for this thing to stretch right back into the median line possibly. So I'm cautious here. I'm cautiously looking for short entries against 72.82. To go back, oops. Here's what the intraday chart looked like. Here's what we look like right now. Okay, so basically rallied right into this convergence. Really nice touch. We're there right now. It's also a basic 786 retracement, of which we saw a very nice pivot last month right into that region. So watch for this region as resistance. If it breaks through, you're looking 73.11, you're looking at 73.60 would be the median line that I was talking about on the daily chart. And I think that's sort of where you'd start to look again for some resistance. But near term, heading into the U.S. trade session, the focus is on 72.79, 72.82. All right, downside targets haven't changed. You got the lows there from way back in, what was that, May? You have the lower parallel, again, so if we break those lows, 70.88, 70.57. This is near-term bearish invalidation. So we're knocking on the door for resistance right now. Which is why for Aussie key, it kind of makes sense if you get a little bit of a kickback in Aussie key here, and then you stretch higher. And that might be the game plan in Aussie dollar as well. You know, you might get a nice downside scalp here into the U.S. trade session, and then it just holds mid-range support target, and an initial support would be still 72.22, and then it launches through. All I know is that this is near-term, definitely near-term resistance here for Aussie dollar. Hi, Mike, Aussie dollar. I think there is a 30-minute trigger pending for a short 72.80, says Graham. Let's take a look. 30-minute. Ooh, that's a nice trigger. That's been in play for a while, huh? How many touches we got on that? 3 touches. Not bad. Whoops. Interesting. Bear with me 1 second, guys. Sorry. I want to see what this looks like on the near term. Okay, so here's the 1 minute looks like. We don't want to look at that. 5 minute. Yeah. So there is, yeah, I see what you're talking about in the 30. So this is a sort of a comparison I like to do. This makes sense. The only thing you want to always keep in mind, Graham, is that you need to wait for the 30-minute candle to close for you actually to get the trigger, which is why over the years I've tended to rely a little bit less on a 30-minute trigger. I tend to watch this once I'm in the trade, but trying to get an entry is very difficult unless the 30-minute candle literally closes as it's breaking. So I brought my attention a little bit over the last couple of years to the nearer term charts. And if you look at the 5 minute, your kind of momentum is perfectly range bound sub 60 and above 40. So I'd be looking for a little bit more of a better entry near the Asia highs here for a move lower. And I'd look for a new trigger to materialize here. That's definitely something you want to keep an eye on once you're in the trade, Graham. And if you get it, right on. But for entry, I don't want you to miss entry because you're waiting for a 30-minute candle to close. Keep your eye on your chart. Try to get a stop against the highs from London. That's also the Asia highs, which is perfect. And yeah, if a near-term trigger materializes here, I think you're going to be a little bit better off. Does that help? He says, agree. It's just telling to me to find a 5-minute trigger. Yeah, I'm with you, Graham. I'm with you. Always down to give you my feedback. No problem. All right. That is Aussie dollar. Any questions on that, feel free. That is number 7. Number 8, I'm running low on time, so I don't want to spend too much time on euro pound. Look, I'm a little disappointed because I thought the break yesterday was finally materializing. We came back in. Here's the daily chart looks like. This is a big level. It's still the same level I'm talking about from the report on Monday. It's 85, essentially. 84.97 is what we needed to move below. You saw a clear break there. It looked legit, but the close, just like we did in the dollar index, just like we did in crude, just like we did in some of those major daily reversals yesterday, came right back and closed above that 85 handle. So I really don't know what to do with this right now, guys. I still think you move lower. That kind of reaction kind of makes me think this thing could move for another move towards that median line before moving off again. Long story short, and you still think you're at risk for a move down into 83.50 here on euro pound. It's the grandpa trade, so it's going to take its bloody time here. It's not it's not in a rush for anyone. It never is. Questions on euro pound? Okay, dollar yen. Let's jump into this real quick. So here's what the dollar yen. There's not been much to talk about right now. This was the daily chart that we put back on Monday. Key support was 115.52 into 116.08. We talked about that yesterday. This thing made a run into the high. Horace, are you in the room here? There you are. So again, I don't know how that panned out for you, but here's what the dollar yen looks like right now. Okay. Yesterday's low is still where I'd have my stop. I know you were asking. I know you were worried that you're capitulating on trying to get on the long side of the trade. This is what I can tell you, man. The failure to break through that high and the magnitude of which it pulled back, definitely something to respect near term, I think. It's a tough call from here. It's trying to call a high on, or even if you're trying to get on the long side, you're messing with an extreme here, obviously. In both sentiment, in both momentum. I think you've been obviously been getting divergence all along those highs. So it's tough. It's tough. I'd either want to see a close or break above that high to continue favoring it. I still think you stretch into 120. But in the near term, this thing could come right back into 115 first, which is what we had highlighted early in the week. This is that key 618. It's the August 2015 low. It's a nice stretch low from previous price. It's the median line off the low, which has gotten 1 tag, 2 tag, 3 tags, resistance, instant support, and converges on that region a little bit later here in the week. So, or a little bit later here in the early month trade. So the point being, I like the dollar yen lower. I know it's kind of a risky move, but if I have to be long yen versus anything, in my humble opinion, I still think this is your best shot. I still think this is your best shot. Here's the 4-hour. Outside reversal candle on the 4-hour chart off of resistance. That's, you know, pretty bearish development. It's a 2-hour. Oops, sorry about that, guys. Horace says thanks. Okay, cool, Horace. Yeah, it's a tough call, man. Watch that low from yesterday. If we give out, I'd be looking, again, remember, like I said last night, the weekly open comes in right here. That's kind of like your last ditch effort. If you look to the left there, you've seen some pivots there from last week's weekly opening range. So I'd be looking at that, you know, I wouldn't want to hold a short into it, but, or I wouldn't want to hold a long position into it, but if that gives out, I mean, look for 115.50. And hopefully we can get some structure to this decline, because right now you're just in the context of a basic range, which is why I was, you know, you have to keep things. Let me take a step back. Horace, just one thing I want to just note. I don't want to pick on you, but I just think it's a good lesson for us all. We always want to keep things in context of what the market is doing on whole in trend. Meaning, yeah, dollar yen is bullish. Yeah, we talked about dollar yen. The broader picture obviously is a constructive trade. The long side has definitely been the winning, paying side for the last, I don't know, almost year or 6 months, let's call it. But even on the near-term context, you're at the upper bounds of a recent range. Very hard to justify taking a long position from those levels, even if you get a near-term trigger in price. If you're watching a 5-minute chart and you get a resistance trigger break, even if you see those things, take one step back. It takes 2 seconds. Look at the daily chart. Look at the 4-hour chart. Well, we're at the highs. Do I really want to take a long, you know, just pips away from the high that we made? So taking that step back sometimes can prevent you from, you know, pulling the trigger on an instinct trade like that. Even though, like I said, we are constructive dollar yen the long term. Obviously, timing is everything. So hope that helps, Horace. I do want to inevitably buy, but right now I'm hoping for the pullback. Now, the one thing that I want to bring to your attention is yesterday we did this. We brought on the Nikkei 225, okay, and we matched it up like this, and we wanted to look and said, look, they're pretty much moving very, very nicely together. Ever since the base that we made in September specifically, not so much the July low, but the September low, even on whole for the ratio of the advances, it's been pretty dead on, right? Well, over the last 24 hours, just as we saw in dollar CAD and just as we saw in crude, you know, the Nikkei has ripped. And we'll take a look at the Nikkei chart in just a moment as dollar CAD has continued to hold those highs and actually melt lower. So one of these two trades is lying today, and we'll want to definitely assess the close. I hope it's the Nikkei because I do like dollar yen lower, but here's the Nikkei 225 looks like. It's number 10. Look at that thing. I mean, again, you can't make this stuff up. If you ever have doubts about, you know, if you ever have doubts about your analysis or about that kind of validity, it's right here. Look at that median line action. Resistance, pull back, the breakthrough, charge the rally into key resistance. This is a nice Fibonacci confluence of both the 786 retracement from the decline off the highs we made in 2015 and a nice clean 1618 extension of the advance off the lows. It literally caught the high, okay, for December. The pullback found support at the median line, and the break higher today is right at resistance. So this is why I'm not, what's the word? I'm more inclined to think that the Nikkei is lying because it's still at resistance. It's still at resistance. It hasn't broken through any major key levels. Dollar yen did this move yesterday. I just think that dollar yen is front running it. Dollar yen tried to break the highs yesterday, failed, and pulled back. Nikkei is just doing that today. Okay, so is this just kind of laggard right now, or is there some sort of divergence that we're seeing, which could be marking a near-term extreme or near-term reversal in one of these prices? Now, if this breaks 19,676, I'd be more inclined to think that this is still on the right side. I wouldn't want to get too aggressive on the dollar yen short, but near term, this is a big level for me. This is a big level for me. Beyond here, you're basically looking at 2026, which is the highs from November of 2015 and basic 50 line for the current operative structure right there. So we're at an inflection point of sorts, both here on the Nikkei 225 and both on dollar yen. Again, respecting that they're both coming off some pretty big resistance. Not so much in dollar yen. I don't really have anything technically here in dollar yen, but if you look back to those pivots that we made back in November, September of last year off this region, just the fact this is the December high that we're failing at has me looking here for a move lower. Questions on dollar yen or Nikkei 225? Okay. Moving right along, let's move into the commodity complex here, and then we'll take a look at Kiwi dollar and Kiwi yen, Kamal. I got those for you. So first off, Nat Gas. We looked at this trade yesterday for Mr. Conwall. Here's what Nat Gas looked like. It's in. I was laughing when I was looking at this morning, Conwall, because actually that intraday pitchfork worked perfectly. Look at this. This is the 50 line. Pretty darn nice catching the lows there, okay? Now, as you were saying that you were looking for that rally today, you were on the long side off of that support. Like I said, it was a little bit too aggressive for me on a couple of different things. I'll show you what I was looking at, Conwall, why I sent you that message early in the webinar here is because, first of all, you're still in pretty steep oversold territory, even on a 120-minute chart, which is not something I want to fade, right? It's the break back above 30 here that would be sort of your indication that you might be making some sort of near-term base. So that's something that had me concerned. Secondly, the sheer magnitude of the drop, you don't want to necessarily make it a habit, guys, of trying to fight something like this. Yes, you're at confluence support. What would that mean for me as an intraday trader? Just means I sit and I wait and I look for the rebound to get short again. I've been wanting to be short. Just because I'm closing out a short doesn't mean I want to be long. Very, very large misconception, especially in intraday trades when people say, hey, are you closing out your short here? I'll be like, no, I don't want to be short anymore from here. It doesn't necessarily mean I want to be on the long side. Just means that at this point, I don't want to press my luck. If you're holding short exposure, bring your stops down to the Asia highs, basically the highs that we've just, to the highs that we just made, excuse me, near that 130, near that 332 level. And look for initial targets, would still be that swing low we made in overnight, and then down into that 311 level, which would be a basic 50% of the entire rally. Still, there's not much structure to the decline. Do you know what I mean here, Conwall? So I'd want, on the real near term, something a little bit more I can work with. This is still a 120-minute chart. Leaves room for a rally up into here. I don't want to take a stop at 340. So looking lower, still like the short side, I'd say below the median line, and that's the level I cited to you when we were talking earlier. If it rebounds, right, that's where I'd start to look for some resistance alongside that median line. Next downside targets beyond the lows is 311. Also keep in mind that that 309 level, just below 311, holds not only the swing high that you made here back in 2015, but also a basic pivot the same slope off the lows. So if you take this same slope, a parallel, that's support, that's resistance, support, resistance, break, that converges right there with those highs from September and last year, 2015. Okay, looking for rallies to sell here in nat gas. Conwell, hope that helps on nat gas. Let me know if you have any questions on that. Copper, which is also a trade that we discussed yesterday, looks like this. Have us at resistance near term, okay? Right at resistance right now. So I guess let me start with the daily chart. Some basic slope lines in play here, extending off the lows from last year, or not last year's low, excuse me, just the August lows of last year here. Resistance, support, support. You saw that big old outside day reversal that we made back on the 27th of last month. Now testing the swing lows that we saw in November. It's a November 30th low. If you take a look at this on a near-term price action, well, let me take one other take here, guys. You see how this held 40 as support? That has me thinking this could be a little bit more of a material bounce. So I don't have as much conviction on copper because because of those exact reasons. I think you could get a little bit more material bounce, but at the same time, you're at downtrend resistance. Look at this chart. Here's the intraday, 120 minute for copper. Let's bring it out to the 4 hour. Here's the 240 minute. Very, very basic pitchfork off the highs here. A little bit fancy on picking the highs, but it's continued to guide price action rather well. Median line, support, catching the lows overnight. Basic slope off the lows here, all converging at 257 as resistance. Although I do think this could actually rebound higher, I don't want to buy into resistance. We would need to clear 257. On a breakout above 257, I'd be looking much higher here in copper prices, but as it stands, you're at resistance, or you're just below resistance. Kamal, does that make sense? For copper. Last but not least, he says, okay, sir, take your time. Yeah, I'm running out of time, so I'm kind of trying to get through these for you. Gold. We haven't gone over gold over the last session here, but very interesting. Guys, you can catch the gold quarterly forecast as well as the yearly forecast. I think I wrote last week of last year for daily effects. And the levels are just insane. They continue to play out so well. If you guys have been with us on SB, you know that we've talked about 1120, 1130 ad nauseum for months. And the fact that that caught the low, adds conviction to the really clean price action that we've seen in gold all throughout last year. Look, you're coming in some near-term resistance near 1171. I don't want to stress that level because you're coming up against the underbelly of a 618. I'm not one of those guys who puts a retracement and works with it for the next 4 years. You'd need to see more of a pivot for price for me to actually respect that as near-term resistance. That said, you have some pivots in price, swing lows, swing highs. I'll keep it for now. Swing lows from back here in November. I'll keep it for now. And it's also the November open, or the December open. So 1171 is sort of where I'd start to look for initial resistance, possibly a pullback. But this base of which this thing reversed off of is such a key level. Okay, you're looking at an exact 1618 extension from the decline off the highs, a 764 retracement from the ascent off the 2015 low, so all of 2016 price action. The 2014 concerted swing low was right there as well, and basic slope, right? So it's a very, very clean move. You had even a trigger break in momentum back above 30, right off the base there. I mean, just a beautiful move. Obviously, I wasn't really active here, guys, into the end of last year, so you didn't hear me talk about this much, but it's been very, very, very clean. So look for some near-term resistance, long story short, in gold here. Look for a kickback. I want to look to stay constructive near-term above 1142, longer term 1120. Okay, as long as we're above this, this is a huge, huge support. You need to respect the upside, I think, in gold. And if we do get the material pullback in the dollar index, the ICE dollar index, if this does materialize to a little bit more of a pull, that would only fuel the upside in gold. Keep in mind, gold has been making this advance over the last couple of weeks in spite of all this dollar strength. Tells you something. Definitely something you want to pay attention to. All right, so that's a quick look at gold. So nat gas was 11, copper 12, gold 13. We got mad done today. And Kiwi dollar, Kiwi yen. Let's do that real quick. Here's Kiwi dollar. I bring this up because I'm going to go over Kiwi yen for Conwall. I don't really have a play on Kiwi yen as it stands right now. All I can tell you for Kiwi dollar, excuse me, as it stands right now, all I can tell you for Kiwi dollar is I would be interested in a sell on a topside break here if we do break through this into this region. Excuse me. It's basically like 70.50 all the way into the 200-day, which is 70.76. This is sort of my sweet spot. I think if Kiwi gets up here, it would be a great sell opportunity. You have some highs, swing highs here from last year. You have some swing lows from October. There's just a lot sort of stacked up here ahead of the 200-day moving average and upper median line parallel. So I do want to be short. The broader short picture, I think, for Kiwi is pretty darn clear. Do I want to be short from here? I don't know. You're knocking on the door for resistance. So on an intraday basis, yeah. But from where we are in broader trend, you're coming off a pretty big support. I do think this thing could rally more. Here's what it looks like on the intraday. Okay, you got this coiling action. You got momentum starting to catch support at 40 or above 40 on an intraday basis. At its face value here, guys, the only thing you want to pay attention to for Kiwi is the weekly opening range. Okay, it's a weekly opening range just below resistance, former key support. Those tend to be beautiful plays. So if this breaks higher, again, I'd be looking for a near-term rally near 70.35. It's not labeled here on the daily chart, obviously, but again, that 70.50 level would be a beautiful spot to start to look for some resistance initially. If the opening range breaks to the downside, I'd be looking for a run into the 2016 open that takes it down into 68.30, 68.27. That's an initial target, right? Eventually you get down to 67.80 and the lower parallel here, basic trendline support. But first things first, look for the break of the weekly opening range. Questions on Kiwi? Pooja says, I know you're short on time, but downside levels on Aussie yen, please. Holding shorts from nearby stop at 85.48. 85.48. Okay, yeah, I'll definitely get it for you. No worries. Going once, going twice. Kiwi yen looks like this, and then we'll jump right into Aussie yen subsequent. Actually makes sense. Look, I know, Conwall, I talked about this earlier. You're kind of like, okay, forget about it. But I just do want to say this. We don't want to make a habit of forcing analysis on a trade, guys. If there's nothing there as far as technical clarity, you sit on the sidelines, no problem. There's tons of opportunities elsewhere. And I think this is one of those trades where there's just no conviction on what's happening in near-term price. All I can tell you is if you hold a gun to my head, I want to be short sub 82.06. Last year's open, the highs that we've made so far for the weekly opening range. It's pretty plain and simple as far as the daily chart's concerned. The intraday chart, like I said, I don't want to force analysis on this. There's really not much here. All the intraday chart does for me is reinforce, Conwall, my short side bias below this region. Where do I need to see a break? Doesn't matter. It's the same exact level. Break of the weekly opening range, which would be a break of this sort of near-term, real near-term channel. All right. Other than that, there's really not much to look at here, and I don't want to force a position on it. Aussie yen, 14, 15, 16 is Aussie yen for Pooja. Here's what Aussie yen looked like. I actually do like Aussie yen a lot. I think we talked about it yesterday, Pooja. I'm not sure if that was here, but we came right into that key region, and we reversed 85.54. We overshot it a little bit. 85.54 was the swing high that we made for the opening range of January. or excuse me, December, 85.64 is a basic 50% retracement of the range. And this is, I think, what we added last in the webinar yesterday. So a nice region of which I think you start to look for some resistance here in Aussie yen if it's going to hold that median line. You know what I'm saying? The only thing with this, Puja, is that we didn't get a really nice hold of this median line on the way up, nor did we on the way down. I don't want to stress it, but just from a sheer Fibonacci swing high level, yeah, I think you're coming into some shorts. Now you're holding a short from 85.48. Okay, so you're a couple pips in the money right now. Nice entry on that, by the way. Mm-hmm. Okay, I don't want to rely on this because I have no way of confirming that this is a concerted high, but just for some near-term targets, since we're already in the trade, see if we're getting a reaction. Okay, yeah, so I'd be looking for a run into here. Initially, 84.70, 84.50 would be a really nice region to look for. And if this does turn out to be the high, Puja, I would be adding this. Again, it's way too early for this, but if that is the high, you might get some really nice utility out of looking at that. And in fact, if we add that right now and it does end up being the high, too premature, I have to keep stressing that, too premature, because we haven't even opened up the U.S. trade session. But this does break lower in U.S. trade. Look where the 50 highlights near-term support. That 50 line comes in right at that 84.72 region. Entry is actually 85.38, actually, or stop is 10 pips now. Okay, yeah, that's exactly how I would play it. That's exactly how I would play it. Real tight stop on this. But I do like it. Look, you got divergence on the intraday chart here for the 4-hour on those last couple of highs. You haven't gotten a trigger break yet, but let me see what it looks like. Here's the 2-hour. Even stronger divergence here on the 3-hour, although above 70, so I wouldn't want to stress that. Ooh, this looks good. Remember, off the low in price. Oops, excuse me. This is the low in price. Yeah. I like it. I like it still below, where's your stop? 48, right on. I like it below this swing high right here. If it holds below that, I'd be looking for the move lower. Pooja, does that help? Thanks for the PF and trigger, waiting and watching, says Pooja. Cheers. Yeah, it's aggressive. All this analysis is aggressive based on this being some sort of near-term high. So obviously, you know the ramifications if we make it through. But that's sort of how I would be playing this if I was already in the trade. All right. We did it. We got through all the pairs that I wanted to cover today. It's 16 on whole. So I'll have this posted for you shortly, guys, after the close of the webinar here. Thanks for everyone who attended. Eileen says, thanks for the class. See you again. Have a good one. You did it. Cheers. I'll see you guys all tomorrow morning. Don't forget, Jamie will be up at 12 with the midweek strategy webinar. He's got a lot of gold for you, so don't forget to keep that on your calendar. Have a good day trading, and I will see you all tomorrow morning. Cheers.